Hello guys, welcome back to another Lumley trading video. In this one we're going to be going through how we're going to be trading PPI this Friday at 8:30 AM Eastern Standard Time. Now, for all our trade plans we do always post these over on LinkedIn, or if you're already subscribed you'll get it to your email. But again, this is kind of always the easiest way to access it. If you want, just go and subscribe to or follow the LinkedIn and you'll get the trade plan here. So we did do a trade plan for Wednesday and Thursday. We didn't make videos on them because, again, it's the same kind of trade every week. Didn't think we needed to go too much detail into those, but we do occasionally live stream them if you want to see it in a live example. But going on today, and again, this is pre-recorded. We are recording this on Tuesday because I don't think I'm going to be able to record it coming close to the release. So I'm just going to be going through the trade plan now because, again, it's not going to change in the next few days. So it's easy enough to go through it now. So, US PPI, this is going to be released on Friday at 8:30 AM Eastern Standard. Now, on this trade, so last week, basically we hit 7 out of 7 trades. All the ones how we were going to play them out, they all worked out as expected. Now, on this PPI release, again, if you're looking for, very high probability trades, this may not be the one because the other ones, they work out about 90-95% of the time. This one, on the other hand, is looking more about a 75% accuracy. So still definitely a probable chance, but again, less accurate than the other one. So just take on that bit of extra risk, maybe reduce a bit of size if you don't want to be taking on the risk. So that's all this section means. Now, due to the high sensitivity of inflation, all I'm looking to do is play inflation. Now, this is what's happening on a lot of these inflation plays is it seems to be a lot easier just to play the direction and get in for a quick scalp trade. And the reason for that is, and it's kind of making it a bit harder to test, is if we go back to maybe even July, we're not as sensitive to, we were not really that sensitive to inflation data as we are now. So before they might have been fade trades, now they seem to be more directional trades. And that's what I mean by it's less accurate is, it was a different trade to what now than it was before we were super sensitive. Last week we were quite lucky in the sense a lot of the trades, they were the same before high sensitivity to inflation compared to now, even though we are highly sensitive. But yeah, this trade was a bit different in a weaker environment or in a more kind of predictable environment. In a less predictable environment, this trade plan changes. So that's why we said there's a bit of extra risk. But all we're looking to do on the trade plan is trading the yen. Again, the yen seems to be the better play when looking to play direction, for the main reason being is it doesn't fake out. So obviously if you're trading a direction, having no fake out really helps the accuracy, because obviously then we're not going to get stopped out instantly. More than likely we're going to make money on the trade. So what we're looking to do is basically just place orders either side, 20-15 seconds before the release, around 5 to 10 ticks, and we'll look to hold the position for under a minute. So again, pretty much a scalp trade. So how do we set this up and what do we mean? So again, looking at the yen, so on the right we have the S&P, on the left we have the yen. So obviously all our focus mainly goes on the yen. So that means all I'm looking to do at coming into when it's 8:29, 30 seconds, or if you're using Think or Swim, obviously the time's up here. So actually right now is a perfect example because we're actually recording it at the time that it would be released on the Friday. So I'll kind of set this up how we would. So we're waiting probably about another 10 seconds. Again, have your size, so 1 or 2 contracts, or again how many you want. Again, I'd probably reduce a bit of size on this trade just because the accuracy is a bit less. Now we're about 10 seconds before release, so all you would do is place a stop this side, another stop this side. So what this will do is obviously trigger the direction. So as it's a stop, if we break above this level, it will trigger this stop and we'll end up actually getting long. So that's how we get into the trade, and the reason we actually have both trades, because obviously firstly we don't know what direction it's going to go. That's kind of 50-50, a bit more of a gamble. But what it also does is basically it's our stop loss. It protects us. So cool, it triggers this way, shoots up. Let's say for any reason it was a fake out, you've still got that protective stop there, because obviously that's going to take you out of the position. Here you're long. If it hits this, it's going to take short, so obviously your position goes back to neutral. So that's why I like leaving both these orders out. Even if it triggers to the upside, I won't cancel this trade or this entry until I have closed out my position, and the reason for that is, again, that's my protection. Worst case scenario, let's say it shoots up massively, and our entries all the way up here, which again, when you're trading news, you do have to sometimes account for your feel is going to be bad. You saw it on yesterday, I'm recording it on Tuesday, but on Monday's video, if you check that out, the trade plan and the direction was correct. The only thing that really made the trade poor was the entry. We basically got filled near enough at the bottom because it just moved so quick. So you always need to have that sort of protection when you're trading news. So kind of worst case scenario, let's say it gapped, or let's say within the first second it pushes here and my fill's all the way up here. Wouldn't be ideal, but at least worst case scenario, it pulls back and it goes back and kind of was a fake out, goes the other direction. At least I got my stop here. That seems like it would be, let's say, a 190 move. Obviously it's a 0.005 in the yen, so you would do that 190 divided by 5, that's 38 ticks. Times by the $5 it is per tick. That's $190 risk. Obviously, when we're placing these orders either side, we're literally risking $50, but that's assuming we get perfect fills either side, which when you're trading news isn't going to happen. So that's why I leave that stop, because then I know near enough my max risk on the high end is probably going to be around $200. Again, that's what we saw on Monday's trade. The fill was bad, we still got stopped out, and again that risk was about $200. So again, you need to account when you're trading news for the wide spreads, especially considering your retail traders. So that's why I leave the order out, and I think that's probably going to be the most important part of the trade. Yes, you may get direction rate right and you can make money, but if you don't have that protective stop, doesn't matter if you make money 9 times out of 10, that 10th time could destroy you. So that's why it's all about having the stops in, especially when trading news. Because again, you need to be protected at all times, really. So that's really the trade setup, though. It's just placing the stop either side, and again, we're looking to trade it for less than a minute. So let's say, cool, it shoots up, we get filled here. Again, not a great fill, but it doesn't matter. We know it's probably going to continue, so we see that next big spike. And again, I'm cutting out probably quite quickly because and the reason this is going to be less than a 1 minute trade is, again, before market sensitivity, it was a fade move most of the time, which kind of just means spikes up, you short the high, and then you kind of play against that direction. And that seems to be a bit more of a directional play, but again, it's to be protective as it's not the same plan as it was before. You want to be a bit protected, so again, that's why I'm going more for that scalp. So even if it is a fade, you can still make money on the move. So that's why I'm looking to trade it. Again, stop either side. Once I cut out, so either we'll flatten the position or just sell market depending on what direction it goes. And then as soon as that happens, I'll come down and cancel that order. So that's the way I'm looking to trade it. Again, these directional ones I quite like in the sense they're quite simple to trade. I think they're easy to trade than trading fades, because obviously with fades you need to kind of hold through the trade sometimes, even if you're getting offside quite a bit and you don't have maybe a physical stop. You just need to kind of cut out when it's going against you. As directionals, it's quite easy to have a predefined entry, a predefined stop, so it can make the trade a lot easier to manage, because you can kind of just let it do its own thing. Even if it goes against you, you know you're going to get stopped out worst case. So that is the trade breakdown on PPI. Let me know if you're trading it. If this video did help, again, let me know in the comments. Why not drop a like and subscribe? And if you haven't already, again, subscribe to that newsletter. Again, you can, if you even come through the LinkedIn, you can check it out here. You can get the one that we post, and again, it's not a bad idea to subscribe as well, so it gets sent to your email, so you kind of get notified as soon as we're releasing the trade ideas, just in case maybe you missed a video or you're not on LinkedIn or something. Again, it's just another way to get notified on what we're looking at, because again, even if you're not trading it, it can be a good thing to know. Maybe if you're not someone who, you're a bit more of a technical trader, you don't pay too much attention to the economic calendar, this again can just be used as a protection. You can see what we're paying attention to, because if we're posting it in this newsletter, we expect a big movement on this. So again, if you're a technical trader, maybe you want to be getting out of that position just while the news is out, because again, it's a 50-50 gamble coming into the news most of the time. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe. I hope to see you in the next news video, and that's it. Peace.